Question 1. Which of the following is true about the underwriting process in life insurance? A. Underwriting only involves assessing the applicant's age. B. Underwriting evaluates the applicant's health, occupation, and lifestyle. C. Underwriting only considers an applicant's medical history. D. Underwriting is purely automated process without human involvement. Answer. B. Underwriting evaluates the applicant's health, occupation, and lifestyle. Explanation. The underwriting process in life insurance involves evaluating several risk factors, including the applicant's age, health, occupation, and lifestyle. This thorough assessment ensures that the policy is priced appropriately for the level of risk the insurer is taking on. Factors such as smoking status, job hazards, and existing medical conditions can all influence the underwriting decision. Automated systems may assist, but human judgment is often required to analyze the entire risk profile. Question 2. Mr. Anderson is applying for a homeowner's insurance policy for his home in Connecticut. His house is located in a flood-prone area. Which of the following would be most relevant for Mr. Anderson to consider in his policy? The coverage. Dwelling to cover flood damage. B. Endorsement for flood coverage, since flood damage is excluded in standard policies. C. The liability coverage section of his policy to protect against water-related injuries. D. His policy's premium calculation, as flood risks will not impact the premium. Answer. B. Endorsement for flood coverage, since flood damage is excluded in standard policies. Explanation. Standard homeowners insurance policies do not cover damage caused by floods. Therefore, Mr. Anderson would need to add a specific endorsement or purchase separate flood insurance coverage through the National Flood Insurance Program (NFIP) or another insurer. This coverage protects against damage from rising water, which is crucial in flood-prone areas. Liability coverage typically does not cover water damage, and premium rates may increase with added flood risk, but flood coverage must be separately endorsed. Question 3. Which of the following is a requirement for an insurance producer to maintain their license in Connecticut? A. Completing a certain number of continuing education credits every year. B. Meeting a minimum annual sales quota. C. Reapplying for the license every 3 years, regardless of prior status. D. Attending mandatory in-person seminars every 6 months. Answer. A. Completing a certain number of continuing education credits every year. Explanation. In Connecticut, insurance producers are required to complete continuing education courses to maintain their licenses. This ensures that they stay current with changes in insurance laws, products, and regulations. The number of required C credits and the subjects of the courses are regulated by the Connecticut Insurance Department. (CID). While producers must renew their licenses regularly, there is no minimum sales quota or in-person seminar requirement for license maintenance. Question 4. Which of the following is an example of a risk management strategy used by insurance companies to minimize exposure? A. Risk retention. B. Risk avoidance. C. Risk transference. D. Risk acceptance. Answer. B. Risk avoidance. Explanation. Risk avoidance is a risk management strategy where the risk is completely eliminated by avoiding the activity or situation that would cause the risk. For example, an insurance company might decide not to offer a certain policy in a high-risk area to avoid exposure to losses. Other strategies like risk transference, e.g., buying reinsurance, risk retention, accepting the risk, and risk reduction, minimizing the impact of risk, are also used, but risk avoidance focuses on completely removing the risk. Question 5. A Connecticut resident is purchasing a health insurance policy that covers both inpatient and outpatient care. Which of the following provisions is most likely to apply to this policy? A. A lifetime maximum benefit for hospital stays. B. A waiting period for pre-existing conditions. C. A mandatory annual premium increase. D. A non-cancelable clause based on age. Answer. B. A waiting period for pre-existing conditions. Explanation. Health insurance policies often include a waiting period for pre-existing conditions, meaning that the insurer will not cover medical expenses related to any conditions the insured had before purchasing the policy for a specific period of time. This waiting period is common in health insurance policies to protect insurers from high claims from individuals with known medical conditions. Other provisions like lifetime maximum benefits or non-cancelable clauses are less common in general health plans. Question 6. In Connecticut, an insurance producer fails to provide a policyholder with the full terms of a life insurance policy, including its exclusions and limitations. Which of the following is the most likely consequence for the insurance producer? A civil penalty, including fines and potential license suspension. B. A mandatory seminar on ethical standards in insurance sales. C. A warning from the Connecticut Insurance Department with no further action. D. An automatic renewal of the producer's license for 3 more years. Answer A. A civil penalty, including fines and potential license suspension. Explanation: insurance producers in Connecticut are required to fully disclose policy terms, including exclusions and limitations, to clients. Failure to do so may result in serious consequences, including civil penalties and potential license suspension. This ensures that consumers are protected from misleading or deceptive practices in the sale of insurance products. Ethical violations can result in severe sanctions under the Connecticut Insurance Department's regulations. Question 7. When considering a claim for automobile insurance in Connecticut, which of the following would be considered? A third-party claim. A. The policyholder files a claim for damages to their own car. B. The policyholder files a claim for medical expenses incurred from an accident. C. The driver of another car files a claim for damages after an accident caused by the policyholder. D. The policyholder's insurance company files a claim against another insurer for reimbursement. Answer: C. The driver of another car files a claim for damages after an accident caused by the policyholder. Explanation: a third-party claim occurs when someone other than the policyholder files a claim against the policyholder's insurance. In this case, the driver of another vehicle files claim for damages caused by the policyholder's actions. This is a common scenario for liability coverage in automobile insurance, where the policyholder's insurer pays for damages to third parties, e.g., other drivers, pedestrians. First-party claim would involve the policyholder seeking coverage for their own damages. Question 8. Which of the following is true about the National Flood Insurance Program (NFIP) in Connecticut? A. Flood coverage is automatically included in all standard homeowners insurance policies. B. Flood coverage is not available to residents in flood-prone areas of Connecticut. C. Homeowners in Connecticut can obtain flood insurance through the NFIP or a private insurer. D. The NFIP provides coverage for all natural disasters, including earthquakes and wildfires. Answer: C. Homeowners in Connecticut can obtain flood insurance through the NFIP or a private insurer. Explanation: in Connecticut, flood coverage is not included in standard homeowners insurance policies. Homeowners can obtain flood insurance either through the National Flood Insurance Program (NFIP), a federal program, or through private insurers that offer similar coverage. The NFIP specifically covers flood-related damage, while private insurers may have their own flood insurance policies. Other natural disasters like earthquakes and wildfires require separate policies. Question 9. In Connecticut, an insurance producer is required to disclose any conflicts of interest to a client. Which of the following is considered a conflict of interest? A. The producer receives a commission for selling a policy. B. The producer has a financial interest in recommending a particular insurer to a client. C. The producer discloses all potential commissions and fees to the client. D. The producer is licensed to sell multiple types of insurance products. Answer: B. The producer has a financial interest in recommending a particular insurer to a client. Explanation: a conflict of interest arises when an insurance producer has a personal financial interest that could influence their recommendation or advice. In this case, if the producer has a financial interest in recommending a specific insurer, it could affect their objectivity in advising the client. Ethical standards in insurance require producers to disclose any such conflicts of interest to ensure that clients are not misled and are making decisions based on their best interests. Question 10. When determining the premium for a life insurance policy in Connecticut, which of the following factors would most likely result in a higher premium for the insured? A. Being a non-smoker with a healthy lifestyle. B. Having a high-risk occupation such as a commercial diver. C. Being younger and in good health. D. Having a low-risk occupation such as an office worker. Answer: B. Having a high-risk occupation such as a commercial diver. Explanation: life insurance premiums are determined by assessing risk factors related to the applicant's lifestyle, health, and occupation. Individuals with high-risk occupations like commercial divers are more likely to face higher premiums due to the increased likelihood of accidental injury or death. Healthy lifestyle, being younger and having low-risk occupation would generally result in lower premiums, as these factors decrease the risk for the insurer. Question 11. In Connecticut, which of the following statements about the role of the insurance commissioner is correct? A. The insurance commissioner is responsible for setting insurance premiums. B. The insurance commissioner regulates and enforces state insurance laws but does not oversee insurance companies. C. The insurance commissioner can issue fines and penalties to insurers and agents for non-compliance. D. The insurance commissioner is responsible for providing insurance to residents in underserved areas. Answer. C. The insurance commissioner can issue fines and penalties to insurers and agents for non-compliance. Explanation. The insurance commissioner in Connecticut has the authority to enforce insurance laws and regulations, which includes issuing fines and penalties to insurers and agents who fail to comply with state regulations. The insurance commissioner also ensures the solvency of insurers and protects consumers, but does not set premiums or provide insurance directly to residents. Question 12. What type of insurance policy would most likely cover a business owner for damages caused by their employees' mistakes or negligence in Connecticut? A. Commercial general liability insurance. B. Business owner's policy. C. Professional liability insurance. D. Workers' compensation insurance. Answer. C. Professional liability insurance. Explanation. Professional liability insurance, also known as errors and omissions (EO insurance), covers business owners for claims made against them due to mistakes, negligence, or omissions by their employees. This is particularly relevant for businesses that provide professional services, such as law firms, consulting businesses, or financial advisors. Question 13. Under the Connecticut uninsured and underinsured motorist coverage law, which of the following is true? A. It is optional for all drivers to carry uninsured and underinsured motorist coverage. B. Uninsured motorist coverage covers damage to your vehicle by an uninsured driver. C. Underinsured motorist coverage only applies to property damage. D. Drivers can reject both uninsured and underinsured motorist coverage in writing. Answer. B. Uninsured motorist coverage covers damage to your vehicle by an uninsured driver. Explanation. Uninsured and underinsured motorist coverage is required in Connecticut unless rejected by the policyholder in writing. Uninsured motorist coverage provides protection for the policyholder if they are involved in an accident caused by a driver who does not have insurance, while underinsured motorist coverage provides protection when the other driver's insurance is insufficient to cover the damages. Question 14. Which of the following would most likely be covered under a standard homeowner's insurance policy in Connecticut? A. Flood damage. B. Earthquake damage. C. Windstorm damage. D. Mold damage. Answer. C. Windstorm damage. Explanation. A standard homeowner's insurance policy typically covers damage caused by windstorms, such as damage to the roof, windows, or siding. However, coverage for flood damage and earthquake damage requires separate policies or endorsements, and mold damage may be excluded unless it results from a covered peril, such as a burst pipe. Question 15. Which of the following best describes the purpose of a rider in an insurance policy? A. A rider is an endorsement that adds additional coverage or amends the terms of an insurance policy. B. A rider is the primary policyholder's statement of coverage. C. A rider is a formal complaint filed against an insurance company. D. A rider is a document that sets the payment schedule for premiums. Answer A. A rider is an endorsement that adds additional coverage or amends the terms of an insurance policy. Explanation. A rider is an amendment or addition to an existing insurance policy that modifies its coverage, typically to provide additional protection for specific items or risks not included in the original policy. Riders are commonly used to cover valuable items, such as jewelry, or to add more extensive coverage for certain types of loss. Question 16. In Connecticut, a health insurance policy must provide coverage for mental health services under which of the following federal laws? A. The Affordable Care Act (ACAT). B. The Health Insurance Portability and Accountability Act (HIPAA). C. The Employee Retirement Income Security Act (ERISA). D. The Patient Protection and Affordable Care Act (PPACA). Answer A. The Affordable Care Act (ACAT). Explanation. The Affordable Care Act (ACAT) mandates that health insurance policies include coverage for mental health services as part of the essential health benefits. This ensures that mental health services are provided on an equal basis with other medical services, aiming to improve access to care for those with mental health conditions. Question 17. which of the following is the main purpose of coinsurance in a health insurance policy in Connecticut? A. To reduce the overall premium cost of the policy. B. To split the medical costs between the insured and the insurer once the deductible is met. C. To provide a fixed benefit amount for medical expenses. D. To pay for services not covered under the policy. Answer B. To split the medical costs between the insured and the insurer once the deductible is met. Explanation: coinsurance is the percentage of medical costs that the insured is required to pay after the deductible has been met. For example, in a policy with 80/20 coinsurance, the insurer pays 80% of covered medical expenses and the insured pays the remaining 20%. This helps to share the cost burden between the insurer and the insured. Question 18. A Connecticut homeowners insurance policy excludes coverage for damages caused by which of the following perils? A. Theft. B. Fire. C. Flood. D. Vandalism. Answer C. Flood. Explanation: a standard homeowners insurance policy typically excludes flood damage. To protect against flood-related risks, homeowners must purchase separate flood insurance through the National Flood Insurance Program (NFIP) or a private insurer. Theft, fire, and vandalism are typically covered under a standard homeowners policy. Question 19. Which of the following is a characteristic of replacement cost coverage in an insurance policy? A. It covers the cost of repairs minus depreciation. B. It reimburses the insured for the actual value of the property at the time of loss. C. It covers the cost to replace the damaged property with a new item of similar kind and quality without factoring in depreciation. D. It reimburses the insured for a portion of the cost based on how long the property has been owned. Answer C. It covers the cost to replace the damaged property with a new item of similar kind and quality without factoring in depreciation. Explanation: replacement cost coverage reimburses the policyholder for the cost of replacing damaged or destroyed property with new items of similar kind and quality without taking depreciation into account. This ensures that the insured can replace the lost property at current market value rather than being reimbursed based on the depreciated value. Question 20. Which of the following is true about the Connecticut Insurance Department's oversight of insurance companies operating within the state? A. The Insurance Department has no authority to regulate rates set by insurance companies. B. The Insurance Department monitors the financial solvency of insurance companies to ensure they can pay claims. C. The Insurance Department can set specific insurance premiums for all insurers. D. The Insurance Department only regulates life insurance policies, not health or property insurance. Answer B. The Insurance Department monitors the financial solvency of insurance companies to ensure they can pay claims. Explanation: the Connecticut Insurance Department plays a key role in regulating the insurance industry within the state, including ensuring that insurance companies remain financially solvent and able to fulfill their claims obligations. While the department does not directly set premiums for all insurers, it regulates certain practices and it ensures that companies meet solvency requirements to protect consumers. Question 21. Which of the following types of life insurance policies in Connecticut provides coverage for a specified term and does not build cash value? A. Whole life insurance. B. Universal life insurance. C. Term life insurance. D. Variable life insurance. Answer C. Term life insurance. Explanation: term life insurance provides coverage for a set period, e.g. 10, 20, or 30 years, and does not accumulate cash value. It is designed to provide death benefits if the insured dies within the term of the policy. Whole life and universal life policies, on the other hand, provide lifelong coverage and build cash value over time. Question 22. Under Connecticut law, which of the following would likely not be covered under a commercial general liability CGL policy? A. Bodily injury from a slip and fall accident on the premises. B. Property damage to a client's equipment caused by a business employee. C. Pollution damage caused by the business's operations. D. Damages from an employee's intentional misconduct. Answer D. Damages from an employee's intentional misconduct. Explanation: a commercial general liability CGL policy generally does not cover damages resulting from intentional misconduct or criminal actions by employees. It typically covers bodily injury, property damage, and certain types of negligence, but excludes intentional acts and pollution damage unless specified in separate coverage. Question 23. In Connecticut, which of the following is a requirement for an insurance agent to be licensed? A. The agent must pass the state insurance examination relevant to their line of business. B. The agent must be a resident of Connecticut for at least 5 years. C. The agent must have completed a minimum of 50 hours of continuing education every 2 years. D. The agent must work for an insurance company before coming independent. Answer A. The agent must pass the state insurance examination relevant to the line of business. Explanation. To become licensed in Connecticut, an insurance agent must pass the state insurance examination for the line of insurance they wish to sell, e.g., property, casualty, life, etc. Other requirements include completing pre-licensing education, but not necessarily residency or prior employment with an insurer. Question 24. Which of the following would be an example of a claims-made policy in Connecticut? A. Policy that covers claims occurring during the policy period regardless of when the claim is made. B. Policy that only covers claims made during the policy period regardless of when the incident occurred. C. Policy that provides full coverage for property damage caused by natural disasters. D. Policy that automatically renews after each year without any premium increase. Answer B. A policy that only covers claims made during the policy period regardless of when the incident occurred. Explanation. A claims-made policy covers claims that are made during the policy period regardless of when the incident that caused the claim actually occurred. This differs from an occurrence policy which covers claims based on when the incident happened regardless of when the claim is made. Question 25. Which of the following types of insurance is legally required for employers to provide in Connecticut? A. Health insurance. B. Workers' compensation insurance. C. Life insurance. D. Disability insurance. Answer B. Workers' compensation insurance. Explanation. In Connecticut, as in most states, employers are required to provide workers' compensation insurance for their employees. This insurance covers medical expenses and lost wages if an employee is injured or becomes ill due to work-related activities. Health, life, and disability insurance are generally not required by law. Question 26. Under Connecticut law, which of the following is considered an unfair claims settlement practice? A. Denying a claim without a reasonable investigation. B. Offering a settlement check for the full policy amount. C. Making prompt payments after a claim is filed. D. Requesting additional documentation to assess the claim. Answer A. Denying a claim without a reasonable investigation. Explanation. Denying a claim without conducting a reasonable investigation is considered an unfair claims settlement practice in Connecticut. Insurers are required to investigate claims fairly and thoroughly before making a decision, and they must not act in bad faith to deny or delay payments. Question 27. Which of the following would be covered under a Connecticut homeowner's insurance policy? A. Damage from an earthquake. B. Theft of personal property. C. Damage from flooding. D. Maintenance issues such as plumbing failure. Answer B. Theft of personal property. Explanation. A standard homeowner's insurance policy typically covers theft of personal property as well as other perils such as fire, vandalism, and windstorm damage. Earthquake and flood damage require separate policies, and maintenance issues are generally not covered by homeowners insurance. Question 28. In Connecticut, how long is an individual required to maintain proof of continuous coverage when transferring auto insurance policies? A. 30 days. B. 60 days. C. 90 days. D. 120 days. Answer B. 60 days. Explanation. Connecticut law requires that an individual maintain proof of continuous auto insurance coverage for at least 60 days when transferring from one auto insurance policy to another. This helps to ensure that drivers do not experience a lapse in coverage, which could lead to penalties or fines. Question 29. Which of the following is a type of coverage typically included in a business owner's policy BOP in Connecticut? A. Professional liability coverage. B. Commercial auto insurance. C. Property and liability insurance. D. Workers' compensation coverage. Answer C. Property and liability insurance. Explanation. A business owner's policy BOP in Connecticut typically combines property and liability insurance for small to medium-sized businesses. It covers property damage and liability claims such as bodily injury or property damage to third parties, and may also include business interruption insurance. Professional liability and commercial auto insurance are typically not included in BOP. Question 30. What is the minimum required coverage for bodily injury liability in Connecticut for an automobile insurance policy? A. $25,000 per person and $50,000 per accident. B. $10,000 per person and $20,000 per accident. C. $50,000 per person and $100,000 per accident. D. $100,000 per person and $300,000 per accident. Answer A. $25,000 per person and $50,000 per accident. Explanation: Connecticut requires a minimum of $25,000 per person and $50,000 per accident for bodily injury liability coverage as part of the state's automobile insurance requirements. This ensures that drivers have some level of financial protection in the event of an accident causing bodily injury to others.